All right. Well, good morning, everyone. Happy noon to some of you. My name's Jacob Brown, co-founder USA Health Plans. Excited to, really get this thing kicked off for what is now our eighth open enrollment for our platform. So we've got a lot of new agents that have come on board with us over the last several months. So welcome. There's some of you that have been here for all 8 years. Welcome back again. Same time of the year, same story, and we just keep beefing this thing up and adding more products and adding more capability and just really enhancing your opportunities. So it's pretty exciting to see, each year continue to develop. So if someone could throw like a thumbs up or yes, you can hear me in the chat box just to make sure that there's no technical difficulties going on, because there has been a lot on my end this morning. I even lost internet. So thank you, Justine. I appreciate that. Cool. So today's call is really going to be centered around the individual platform as we go into open enrollment. And I want to get as much out to you as I can today for you to get ahead of this. But just know that we will still be bringing more plans on in additional some massaging to certain things to get deeper into open enrollment. But what we have today is where we'll start. So in case you missed yesterday's call on the group platform, you missed an extremely long hour-and-a-half webinar that was full of so much stuff. But I tell you what, it was a really big opportunity that we put together for group. And if you haven't been engaging in group, I really think that there's going to be more money made here on our platform over the next 2 or 3 years than's ever been made by anybody, over our last 8. So I encourage you to tune into that. We've made it really simple for you. And for those of you that were on for that call, I will tell you next week I'm going to do a follow-up series, and I'm going to break that into 2 different webinars. One webinar strictly on major medical and one webinar strictly on SBA, so we can all get a little bit more granular on how those benefits apply and how to sell there. But I'm not going to spend time on that today. We are on to individual today. So to kind of kick this thing off, there we go. To really kick this thing off, I want to start with our flagship product. This has really been our flagship product for the last 2.5 years or so. Most of our enrollments are now coming through this channel here on the EBA offering that includes Cigna PPO. We've had a lot of success with this offering. And, it's funny because when we started this platform, 8 years ago, it was really all about finding the lowest cost option you could, saving households as much money as you possibly can, all that stuff. And what's interesting to see really how things have developed over the last few years, the consumer is really gravitating back towards spending a lot of money on benefits and buying, PPOs, stuff like that. And so, we're following those trends, not to discount anything else that's on the platform, because as we go through a lot of plans here today, every single product really has its own place and speaks to its own consumer, right? Most of the time, these products are not really competing with each other. They really just serve their own purpose. And, what I want to create for you is as big a net as I can so you can really try to catch every type of consumer type out there. You're never going to be able to write everyone, but if you can, really look at us as a hub to be able to write most of your business, that's what we're trying to achieve here. So, I'll start with this plan. It is a full-blown major medical, okay? Now, to take a step back. Now, none of this stuff is tied to marketplace or the exchange or subsidy eligible or anything like that. The consumers that are really, best suited for our types of plans in general are those that are, above those subsidy lines, or, above maybe they're only getting a little bit of a subsidy, they're self-employed, or maybe they're just really looking for a cost savings mechanism, or, employer groups, stuff like that. It's important to understand that really all of our products are group products. They're just individual groups. Okay? So that's a little bit different than your traditional products. So sometimes as you go through or they're association products because you join the association, and then you get to access the association's group benefits. These are all like mechanisms that are required for someone to be able to access a plan. So sometimes as you go through these plans, you're going to see different language that you're joining an association or you're becoming a partner in in a partnership or stuff like that. It's all just legal mechanisms because you have to be a part of an entity in order to access benefits, outside of, the ACA, if you will. Now, this product that we're looking at here, it is full-blown major medical. It is ACA qualified healthcare. It's full-blown, right? So we'll look at that. And I do want to say, for those of you who have been writing business with us, we just pushed today our new application process. The application process is now going to run through our enrollment platform. Those of you who have been writing this so far, you know that you've kind of had like this e-sign PDF. We're going to leave that e-sign PDF on for just a little bit because we know some of you have those out in the field, but over the next week or two, we're going to be transitioning to all enrollments run through this because it's just going to simplify the process for all of us. Spent all summer building that. So thank goodness it's here. But anyways, and these should all be live on your site. If they're not, just shoot a support ticket into support. The plan itself, it is underwritten, to get it. So you're going to fill out an application here to go to underwriting. We need to have the application in by the 20th. We're setting that deadline time frame. So if you want a first of the month effective date, the application needs to come in by the 20th because we're generally going to get an approval by the 22nd, 23rd. And then you have to have the doc signed by the 25th, right? So, if you're trying to send people into underwriting at the deadline on the 20th, I mean, you got to be paying attention because if they get approved on the 23rd and they don't sign by the 25th, the system's not going to recognize to make them active the first of the month, okay? And then we're piecemealing stuff and stuff gets messy. None of us like that. So when I show up here that the deadline's the 20th, that's between you and USA Health Plans, right? You're the agent. You want to have large-scale success. Don't go tell your consumer that the deadline is the 20th. Get them in the door. Tell them the 15th. Tell them the 10th. Everybody loves to wait to the deadline. That's how it works. You should see the trends in our model on these deadlines. I mean, part of me wants to just move the deadline up to the 15th, but then that's just going to create just as many issues on the other side of the coin. So please set the expectation to the field that you want to get your application into underwriting by the 15th. Just gives us more time to work. So once approved, we will then send out, the approved rates. You and the member will see it. They'll sign the approved rates. They'll go effective. Simple as that. So let's look at the plan outlines. Well, I guess on this new product, I have pulled that down. So let me do something real quick. Oh, yep. I'm going to go back here, actually, because I got some outlines on the group side. So I'll just pull something from the group. Okay. So just to look at some plan designs, major medical is major medical. It's pretty straightforward. The plans have a deductible and they have a max out of pocket, right? So when you're looking at this, again, this is a major medical policy that an individual is obtaining directly, basically an individual group policy, right? So there's no funny business here, I guess is what I'm really trying to say right now, okay? Major medical is major medical. It's, pretty much for the most part, it's FDA approved, form of treatment, and it's medically necessary, it's covered. That's just kind of how major medical works in general, right? So, these plans are unlimited. If you could take this benefit summary and compare it next to something on healthcare.gov, I mean, the limitations are pretty much right in line. I mean, what we're talking about here is a difference in deductible, difference in copay, stuff like that. When you look at this, I mean, the difference in max out of pocket. So if you're looking at a catastrophic event, I mean, these plans really work the same in a catastrophic event, right? And don't quote me on these rates here because these are group rates. We'll look at the individual rates in a sec. But if I'm looking at the $73.50 copay, and I'm in a catastrophic event, I'm hospitalized, Well, as soon as you go to the hospital, you're going to hit your max out of pocket. That's just kind of how the hospital works, right? Okay, well, if I go to the hospital on the the $2,500 deductible plan, I'm still going to pay $7,500, right? So if I go to the hospital, the $2,500 deductible and the $7,300 deductible, they're both going to work the exact same. The only difference is, you spent about $2,000, $2,500 more just to have the exact same outcome. So, in my opinion, I think you really want to be putting everybody on this side of the scale. But I get it. There are consumers out there. You cannot change their mind. They want to waste their money on $1,000 deductible. And I guess if you want to waste your money on $1,000 deductible, be my guest. But it is a waste of money. It really is. But hey, sometimes you can't fight the consumer. But I would look at this: write higher deductibles, save the consumer more money, fill the gaps with ancillary plans. You can make more money. Really, in a lot of ways, provide them a lot more benefit because again, if there's a major surgery, hospitalization, these plans are really going to work one and the same. And if there's not, then they just paid $2,000 extra dollars. So add $2,000 of premium to a deductible, and that just turned into a $5,000 deductible because you paid it in premium. So I know I'm spitballing here, but anyways, co-pays, they're all pretty much the same. Difference of $20 or $45. You're talking about an extra $25. It costs $15 to go to the doctor anyway in gas. So I mean, the difference of a copay is really not that much. So other than that, HSA plans. These are HSA qualified, and no copays because you can't have a copay in a HSA plan. At least you can't have a copay until you first met your deductible. So if there's questions, you can type them in the chat box. I'll address them as we go, as many of them as I can. But going back to a plan itself, let's look at rates and how it works on the individual side. Of course, this is the Cigna PPO network, which is really, that's the full, employer, school union type network. It's the big one. It's as good as it gets. You'll find in most markets, almost every major hospital system and network is in network. I'll use Houston, Texas, for example. You can't go to Marketplace and get MD Anderson, which is one of the top cancer facilities. You can't get Children's Hospital there on Marketplace, but you can here, right? And that dynamic really exists in almost every market where the ACA leaves these huge network holes, or make it really tough or really expensive to get the hospitals you want. Rates, here's how to quote. So these are pre-underwritten rates. All right, they're not guaranteed. You're not just signing up for this rate and that's the outcome, okay? You have to understand these are pre-underwritten. What we do is we look at our trends. Underwriting is always an ebb and flow, okay? We're not the underwriter, all right? The plan is. But we constantly watch underwriting and see, where the trend is. And what we'll continuously post here is the trend of, where the average average age person is falling. And underwriting is not perfect. It's just, this is just a close estimate. You have to understand this is an estimate. So the best way to quote this is quote it plus or minus margin of error. So I would look at someone and say, hey, you really like that $350 copay? You're 35 years old. Okay, it's going to be plus or minus $75 for member only. So let's just call it $500 to $700. If you can live with $500 a month or $700 a month, we should go to underwriting and see where it falls, because it's probably going to fall around that $585. Some will go higher than that $75. Some will get declined. That's part of it. But on average, this is what we're seeing on I'd say at least 70%. So now I just pointed out a spot where the plan is really not picking up many consumers, okay? And you got to remember that in the health insurance world, one, you're not buying a permanent solution because the health game is constantly changing. You're always really looking at this year by year. Everyone that comes on the plan is guaranteed 12 months of coverage, and they're guaranteed a fixed rate for 12 months, okay? But, if I'm looking at someone that's 35 at $585 a month, that person really doesn't, on average, they really don't put a whole lot of value on paying that much for benefits or paying that much for a PPO. You can't build a product for everyone. Now, we start getting into the 40s and 50s. Now, that's a totally different story because in a lot of markets, in your 50s, you start looking at healthcare.gov. You start looking at HMOs and EPOs, which, of course, an EPO is just a glorified name for an HMO, right? It's one technicality difference. Where your networks are really small, it's tough to be new patients at doctors because, the doctor may be accepting new patients. They may be taking new Cigna patients, right? And then you call them and they say, they go, well, do you have, you got Cigna Connect or Cigna PPO? And you go, oh, I got Cigna Connect, which means you're on Marketplace. And they go, oh, well, we're not accepting any new Cigna Connect patients right now. Try us back. Or we can get you in like 3 months, right? So that dynamic doesn't exist here. So for members in their 40s, 50s, and 60s to be able to come here, get something in the 600s that's full-blown major medical PPO, where where on Marketplace it may be $600 on Marketplace, it may be $800-900 on Marketplace for an HMO, right? What we have found is even if Marketplace is $100 or $200 less, we've even found where Marketplace is $400 or $500 less. Business owners, contractors, people who place values on benefits, they will pay more for PPO. Shocking how much people will pay. Anyhow, here are the rates. Again, try to quote it plus or minus 75 for member only, plus or minus 150 for spouse, plus or minus 150 for children, plus or minus 225 for a family. Okay. Look at enrollment real quick, and then we'll go on to other products. I know I'm spending a lot of time here, but this is our flagship product, and I do want you to see how the process is going to work now. So you'll go in. Now, if you can fill out the application and send it to your member for them to sign, right? But to each their own. Some agents like to fill out the health application with their member on the phone because that way they know it's done correctly, and they can also upsell during those points. Like, for instance, if you wanted to add an accident plan, you can just click the button and then add an accident plan. Thinking. But while it's thinking, we'll go ahead and just go ahead and start typing in. Now, I'm just typing in bogus information up here because for the sake of today. But you would want to, if you're going to enroll a member or submit an application, you want to put in the real height and weight and smoking and all that, because all this information you're typing in is going to bind to the application, right? And it has to be correct. So click update. It's going to recognize the age. So no more like, just a lot easier. You just pick out which plan you want. So previously, the member was selecting their plan post-underwriting. In this format, they are now selecting their plan pre-underwriting. And I know the question that's about to come in the chat box. After underwriting, can they change their plan? Of course, yes. We just know most people have made up their mind prior, so it's better to, we'll take what they're expecting to enroll in up front. And if they want to change it after underwriting, yes, we can. But just for the sake of streamlining and making it easy, I'm just going to go ahead and put this person in the 7350, right? It's automatically going to read the age and the rate that the average rate that should be quoted. And we'll update these as trends change, right? So now I'm going to show you the health application, how to fill it out. Again, if you want to fill that out yourself, great. Probably going to be more accurate and submitted correctly if you do it, but I get it. That takes time. If you want, you can literally, as long as you put this product in the checkout cart like I just did, all you have to do is copy this link, paste it, and send it to your member, and it'll direct them right here, and they can go fill out the application themselves right here. However, you likely lose the opportunity to add on different plans unless they know which one to add on. So we'll go ahead and click continue. Basic information, pick your effective date, fill out their information. If there was a spouse, you would have already, this information would already be preloaded. Actually, you know what? I should probably show you that while I'm right here. Okay, defaults to spouse. I'll change this to, I'll pick out a $7,500 accident plan to cover the deductible. Makes sense. It's small money for a lot of coverage. How I like to sell health insurance. Hey, your policy, it's either $545, and that deductible applies to sickness and accident, or for $59 more, that deductible only applies to sickness, right? Because the accident plan would cover the deductible and max out of pocket 100%. Easy add-on. So type in basic information, social, all of that. So the spouse's information is right here. You will have to come in. This is where I say you may want to do it yourself if you can. You just click the edit button, and you're going to need to type in the spouse's social security number, and then just click save. Right. Here are the health questions. You can go do this on your own and check this out. These are just mandatory agrees, right? That way everyone is understanding some of the framework of this. Some auto declines we've identified from underwriting. We're just going to go ahead and auto decline because it's creating too many issues and time. So pregnancy, auto decline. Yes, it's going to be an auto decline. No, you can go through. Type 1 diabetic, auto decline. Current or pending hospitalization or surgery, it's going to be an auto decline. Currently hospitalized, it's going to be an auto decline. So now the rest of the questions are going into the last 5 years. Arthritis in the last 5 years, no. Autoimmune, no. Right here it lists all the diseases it's looking for, no. No. Now, right here is kind of where we created a stopping point. This is asking for an explanation of any yes answers in the first 5 questions, okay? And I'll go ahead and answer your next question. Yes, I will be making a video, for like a 4 or 5 minute video. That way your consumer can see how to walk through this and do this. We will have that for you. Just need a little bit of time, okay? But so right here, all these answers were no. So I need to list no. If you don't put no there, you can't pass go. It's a required box, okay? So now we're on to the next 5. Cardiac, no, 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 no. So then here, questions 6 through 10, no. All right. So now 11, no, no. Here I'll use me for example. I got mild asthma. No, no. So right here I would say asthma, Jacob. Date of onset was birth. Type of treatment like 2 puffs a year on an inhaler, maybe. See, just the general. If something's no longer being treated, put full recovery, hospitalization or surgery. You get the gist. Anyhow, any medications? Yes. If you take medications, list the medications here. If you don't take the medications, list no. Honestly, medications are really one of the biggest factors in underwriting. If someone's taking a specialty drug, something that you can generally pronounce like a Humira or an Ozempic or something like that, right? Something that you see, like Trulicity, those fun commercials you see on TV, those drugs are typically $2,000 to $5,000 a month. Those are pretty much auto declines because the plan has to pay for specialty drugs. So keep that in mind. You can also Google the cost of a drug if someone puts it on there. If the cost of the drug is exceeding about $400 or $500 a month, they're probably going to be declined as a member only. because the plan doesn't want to accept $500 to pay out $500 because then they still have the risk of hospital, surgery, all of that, right? Now, someone comes in, they're taking a $400 or $500 a month drug, and they applied with a family, and they're paying $1,500 a month. The plan will probably approve them because the plan's going to take $1,500 a month and pay out $400 or $500. Okay, so anyway, submit and send it. The member will sign it, then you can submit it. So I'm going to look and see if there's any questions on that, and then I'm just going to move on to some other products. I don't want to bog down the whole call today on that. So Chuck, your question on the premium, I think I answered that. Those are the Chuck was asking why I showed $587 for employee only, but it falls within $75 because it's a okay. Never mind, Chuck. I see you're next. Yeah, it's a average rate plus or minus 75. Viewer 6, your USA Health Plan site only shows group carriers. How do I add individual? Just shoot a ticket into support so we can look at it and see what's going on. Your site may, yeah, just choose ticket to support. I can't solve that here. Who do I talk about if I'm already contracted with this plan? Reach out to our support team. You've got our level 1 team that can answer more basic questions. If you need to get more level 2 support, then you can get on Alex's calendar. Alex can really take you to level 2, walk you through more stuff. Viewer 54. Can you add other policies in the cart before sending to the client? Yes. I know I cruised through that pretty fast, but you can add your accident, all that stuff. That was just, throw it in the shopping cart. So everything now is running full platform. You can add your dental, add your critical illness. Just click add, throw them in the cart, do your thing. So what is the support team's number? It is 314-256-9596. Boom. Typed it in the chat box. All right, so let's go back and look at plans. Okay, so this plan has wide availability. It is available in California. It is available in Washington State. It is available in a number of those no-sale states that some other plans won't be in. So keep that in mind. On average, when getting major medical in our model, on average, the person gets the lowest rate here. So let's go back and look at our plans. Okay, so we also have Gig Care through Detego. Gig Care is also a major medical policy. It runs on the Blue Cross and Blue Shield network. It is also a PPO plan. I mean, I can make this really easy for you because you'll look at this and the plans really look kind of almost identical, don't they? So in here, this is a simplified issue version, so not underwritten. Average person we're seeing comes back with better rates through EBA, but maybe your client doesn't want to go to underwriting. Maybe you don't want to go to underwriting. I totally get it. And again, that's why we're a platform, because every product serves a purpose and talks to a certain demographic. There are people, since, this plan here, the one big difference between Gig Care and the EBA plan is Gig Care does not cover specialty drugs. Okay. So, because they don't cover specialty drugs, if you have members that are getting declined by EBA because of a specialty drug, this is could be a better fit for them. You'll have to be the judge there. But plan designs are very similar. Difference is cost and the way that it's enrolled. It is a simplified issue plan with 11 knockout questions, and those 11 knockout questions are right here. You can look at these later. I will tell you that I need to update this because for Gig Care, the 7350 plan is no longer available. Now, I am product agnostic at the end of the day. This plan Detego is a great partner of ours. But I do want you to know, with as much heads up as possible, these rates are going up January 1st. Okay. Everybody who's on this plan, whether you enroll them today, you enroll them next month, or you enrolled them 2 months ago, It doesn't matter. Everybody is getting a rate increase on this plan January 1st. We do not have the rates yet. As soon as we have them, we'll get them in the format and get them posted. So I want you to be aware of that. If you are writing somebody on gig care for an 11/1 effective date and they're getting this rate today because this simplified issue, these rates are the rates. This is if the person can answer no to the 11 health questions, these are the rates they're going to get. But that rate is going to go up January 1st. The member is guaranteed 12 months of coverage, but the rate is not guaranteed 12 months like it is on EBA. So that is a little bit of a difference. Again, write what you're most comfortable with. Otherwise, plan summaries, really close to the same. This runs on the Blue Cross and Blue Shield network. Same story as Cigna. You're going to find most providers you're looking for there. However, there are a couple big states where this plan is not available. Washington's another one, right? So there you go. Now, so those are our two major medical offerings. Underwritten, simplified issue, and now what happens if you can't get the consumer into an underwritten box, simplified issue box? Or let's say the consumer is looking at this and going, hey, that's great that I can pay $587 or $600 or $700 a month because, you get someone in their 50s or 60s, they could be $600-700 a month for that $73.50. Some people don't want to pay $700 a month to then have a $7,000 deductible, right? Because $700 a month times 12, that's $8,400 in premium plus a $73.50 deductible. That's $15,800. Some people, especially if they're applying with a spouse, maybe they don't want to pay $1,000 a month or $12,000 a year and then have two $7,000 deductibles. 7,000 times 2 is 14,000 plus 12,000 in premium is $26,000, right? Some people don't find value in that. Some people are going to get rated too high. Some people are going to get decline, which is why we have Value Bronze through the SBA Cooperative. This is a guaranteed issue policy, okay? This is exclusive to USA Health Plans, by the way, as well. We've worked with the SBA for years. We've worked with them on the group side, and we've built a way to come in and bring a product in on an individual chassis. Looking at this, you may notice that this product looks very similar to the ease plans we used to have, right? Now, the ease plans turn into the Bronze USA, the Vault plans, because we, worked with Nationwide on that deal. All those members are still active. Those plans are, fine. Everything's good there. We're just no longer selling new ease or the new Vault plans just because there's been a lot of abuse in the field and because they were covered pre-existing conditions day one. It only takes a certain amount of time for individuals how to figure out how to manipulate that and, create an issue on the plan. And we're in business to make sure that these plans stay in force because your income is tied to it and our income is tied to it, right? We're in business to keep membership going, not to blow up plans. So those plans are pulled down. We've rebuilt that plan model of the ease plans of the Vault plans through the SBA Cooperative. It's called Value Bronze. Very similar. It's a copay-driven plan. You pay a copay and the plan pays 100%. Really that simple, okay? So hospital, you're going to pay a $1,500 copay per day you're in the hospital, and the plan pays 100%. Maternity services, you're going to pay a $3,500 copay, and the plan pays 100%. And now I already know what you're thinking. You're going, well, Jacob, those ease plans only had a $350 copay. Yeah, you're right. They did. But there's a really big difference between those ease plans and this plan, and that is there is no reference-based pricing in this plan. This is full network-driven First Health network. That is a tremendous difference. Why? Because there's no balance billing in network. The facility in network has to accept the plan, right? On an ease plan, where it's reference-based pricing, sure, that's a nice lower copay, but it's the PHCS network for practitioners, and then it's reference-based pricing for a facility. And yeah, reference-based pricing will pay any facility, but they don't have to accept it, and they can balance bill you. So if they balance bill you, $1,000, then your copay was really $350 plus $1,000 balance bill, and it creates unknowns, right? And we wanted to get away from the reference-based pricing model now that we're in full control of this with the SBA Cooperative, which is a great partnership for us, and it's going to be a great long-term opportunity for everybody. We wanted this on full network First Health chassis. So when someone goes in to deliver, the facility will take the plan and the member will know exactly what they're going to pay. Simple as that. So because of that, you have to raise the copays. Otherwise, the cost of the plan is too high. So emergency room, $2,500 copay, mental health, inpatient, all this stuff. So you'll see there are pre-X limitations on a few items. When you get into urgent care, physician offices, preventative, diagnostic labs, all that stuff, there's no waiting periods for pre-existing conditions. So all of your everyday medical needs, no waiting periods. The waiting periods are going to apply to something, something more catastrophic, if you will. So these are guaranteed issue day one benefits. A big benefit that this plan also has over the ease plans is drugs. So when you look at an ease plan or our previous MVP type, individual MVP type plans, you couldn't really figure out how much a drug was going to cost. And here you can. It's a defined coinsurance, because really on those other plans, they're really a glorified discount type drug card. Yeah, the generics were zero, and some tier one brands were had a copay, but regular brand and non-preferred brand weren't covered. They were discount. You didn't know how much they cost. So here, it's really easy. You can just go, oh, you know what? I got to update that product. So I'll update the product, but the drug formulary for the SBA right here, it's really straightforward. You can look at the drug. You can see exactly which tier the drug is, and then you'll know, is it covered, and what the coinsurance is, right? So only drugs that are not covered are specialty drugs. Big benefit to have RX, and yes, this meets minimum essential coverage. So here are the rates. So again, guaranteed issue, and there's a 12-month waiting period for pre-X at hospital, surgery, maternity. So this plan is, I know I kind of skipped over this, the plan limits the amount of coverage by days. So if you are in the hospital, you've got 5 days in the hospital, that'll be covered 100% after the copay. Day 6, you are out of luck. This is not a full-blown major medical plan. It's not there to solve everybody's problem. It's there. This is a great fit for maybe someone, instead of a short-term policy, maybe they need something for 8 or 9 months. Great policy. Maybe they need something for 1 year. Great policy. Maybe they can't afford major medical, can't qualify for major medical, don't find value in major medical, right? Because these are all first dollar benefits. Can provide a lot of coverage. So moving on from that, back. Now, I should say that, that plan is going to do a really good job of covering most people's year in and year out medical needs, right? Most people will not spend more than 5 days in the hospital. Most people won't use more than 2 or 3 surgeries, all that stuff, right? So, but for those that do want some type of catastrophic element, we do have a health share that you can strap onto that to create more of a catastrophic, safety net. We have Washington National where you could add $100,000 of critical illness. We will be bringing on another health share arrangement that's a little less cost than Select Silver, which we'll talk about on a different call, but that'll provide a safety net for that. But those things are in the works because we do understand that it is ideal to have an extra safety net to add to this plan. Real quick, I'll take some questions. DW asks, what happens once you hit the submit box? At what point will the client know if the premium went up? DW, I'm assuming you're talking about the EBA offering. When you submit the application, you're going to be submitting the application based on our average assumed rates. Once they're approved, we are then going to send you and the member a notification of their approval with the approved rates. And if they sign the approved rates, then the plan will go into effect. If they do not sign the approved rates, then nothing will go into effect and they will not get billed. Viewer 62, do these plans cover pregnancy, delivery? Viewer 62, EBA, yes, covers maternity. Gig care, yes, covers maternity. Value bronze, yes, covers maternity. It's just this has a 12-month wait. Does gig care, viewer 31, does gig care require you to fill out a survey like America's Choice? Yes, that is a DTAGO mechanism. Again, every plan has its own mechanism to give you the ability to access the plan. Gig care's mechanism, because you're joining their company, is you have to perform a task on behalf of the company, and they do require you to do a survey every few months. And if you don't, then they can't let you be on the plan. It's pretty basic, but that's part of it. That requirement does not exist here. Okay, that requirement is exclusive to gig care and America's Choice. Joe G, late to the call. Clarify if Cigna PPO covers all MEX MVP suitable for ICHRA, QSERA. Yes on MEC, yes on MVP. ICHRA, I don't know what limitations exactly, versed enough to speak on that. It meets all the ACA requirements. So can ICHRA funds apply to it? Assuming the ICHRA funds requirement is only to meet the ACA requirements, then you're good there. Same with QSERA. But what does 1212 pre-X mean, DW? 1212 pre-X means it's just a 12-month wait for pre-existing, kind of the technical term. So that means if you had a pre-existing condition after 12 months, that pre-existing condition would be covered. Chuck Riddler asks, can I add RxLA and Balance for Life? Possibly. I think RxLA would be, I don't think that would be needed. There is mental health included in the plan, so we'll have to look at that. That'll have to be built in a separate bundle, Chuck. Courtney, can we add accident plans? Absolutely. I don't have the enroll button set. Sorry, on the Value Bronze, the enroll button's not turned on because then you would be able to enroll. The enroll button's going to turn on the 26th. That way, the effective date is forced to 12/1 because we're not taking 11/1. If we had the enroll button today, you could do an 11/1. That would cause problems. So, but yes, this checkout function, all of these plans, all the checkout function for everything here works the same. Any plan, you can add accident, critical illness, all of that. And we're going to look at those plans here in just a bit. Courtney asks, can we, oh, sorry, I already answered that. Viewer 54. Which plan is a health share? Select Silver. We will talk about that in a minute. DW, cool. Christian, do you have a copy of the gig care survey the client gets? I don't. I can get it though, Christian. Shoot a message into support, so we can get that to you. And then Joe, when can we expect the recording? There's a lot to take in. There sure is. I'm going to try to get the recordings out later today. Viewer 18. Did the deductibles reset January 1st? Yes. All deductibles on EBA, GigCare, America's Choice, they are all calendar year, January 1st to December 31st. So really, the perfect time to make someone effective is January 1st. You know what I'm saying? Because then they're just always running in that open enrollment clock. That would be just the best thing you could do. However, that's not always practical. You got people that need stuff in June. So, yeah. And viewer 17, plans auto renew. Yes. So in trying to get ahead of ourselves with that question, but so for Value Bronze, the plan will auto renew. GigCare, the plan will auto renew. America's Choice, the plan will auto renew. Select Silver, auto renew. Premium Health, auto renew. Our ancillaries, everything will auto renew. EBA will auto renew pending their offer, right? Because they're going to get a renewal notice, and someone does have to accept the new premiums. And that really goes for any of the plans. If there's a rate increase, the person has to accept the rate increase in order for it to renew. Now, so we push out for signature, and they do have to re-sign new signature for the new rate. So technically it's auto renew as long as they sign off on the new rates. And we've had quite a few EBA members that have kept the same rates. There will be an adjustment for, trends at time, but, it all kind of depends there. All right, I'm going to keep going. So there was a lot of talk about America's Choice here. America's Choice is also major medical. I mean, it is. I'm telling you, these plan designs, I mean, I know the names are different, but they're really all the same design. I mean, the copays vary a little bit, the deductible varies a little bit, all the same. So this is also major medical, just like GigCare, just like EBA. What's the difference? Why is it there? This is reference-based pricing. So this does allow you to get into major medical. I need to get the rates up here. I'm going to make a note. Rates for America's Choice. Rates here can be lower than GigCare. They can be lower than EBA, but you're putting somebody into PHCS, not PPO. It's reference-based pricing. Balance billing can occur. The facility does not have to accept it doesn't have to accept the plan or payment from the plan. So there are some provider networks that work very well on reference-based pricing and work very well in this plan. I don't want to discredit that. But there are going to be some of your top medical systems that plan's just not going to work at. They're just not going to accept it. You need to walk in on an established network. So while it can save members money, you do have that reference-based pricing potential issue. Viewer 43. So EBA better overall. I think on average, yes, I would say so. I think most of your clients are going to get a better rate there on average. But then again, if they're rated too high by underwriting, viewer 43, then it doesn't make sense, right? Then GigCare is a better plan. If they want to keep it simplified, issue, and easy, GigCare is a better plan, It depends on the market. I mean, I can't guarantee that Cigna PPO is really strong in a particular market over Blue Cross. Now, on average, across the nation, it's really one of the best, but it just kind of depends. So, all right, let's move on. Let's look at Select Silver. Let's change the call. All right. Everybody stand up. I'm going to sit down because I've been over here pacing. All right, you guys stand up. I'm going to sit down. All right, let's talk about Select Silver. Select Silver is a health share. This is actually our original flagship offering. So, like I said when I started the call, this is our 8th year for the platform. And those of you who've been with us for 8 years know that nothing on this platform today was on the platform 8 years ago. Now, we brought in Select Silver. Oh, no, okay, wrong. We did have Select Silver on the platform 8 years ago. Okay, so Select Silver was actually the only thing on the platform 8 years ago. How about that? Everything else was not here, okay? And I tell you that because the health industry is really dynamic. It's very chaotic. It's changing rapidly, and we've taken a lot of heat because you're always changing things. You're always changing things because we're staying up with the market, and because the Affordable Care Act comes in 2013, 2014, changes the entire framework of everything, and it's just now, really, in the last 3 years or so, that everyone's really got their arms around the Affordable Care Act and how and where you can distribute and create product now. Right, so things have changed significantly over the last 8 years, and that's why I tell you it's so important that you look at us as a hub and not just as a product, because that's great. We got EBA, it's great. We got Gig Care, America's Choice. It's great. We got all this stuff, but none of that stuff was there 3 years ago. It may not be there 3 years from now. I guarantee you. There will be another major medical offering that comes along and is more competitive. Someone's going to do it. There's always going to be another plan, right? And some plans have shelf life. Some plans don't last forever. These are group policies. Some of them have 3 and 5 year shelf lives, and then you move to a different group, right? That's part of it. So the more you can look at us as a hub is really important, because you may have a bunch of members on Gig Care today, and let's say that doesn't make sense 2 or 3 years from now. Well, then we'll push a button and we'll switch them. Maybe there's a bunch of people on EBA today and it doesn't make sense 2 or 3 years from now. That's fine. We'll push a button and we'll move them, right? Same with that, with ancillary plans, all that stuff. We've had plans where the group wants to discontinue, and then we'll go out. We have enough members on the books. We'll go out to a reinsurance company and we'll get A-rated paper and keep a group alive and just roll the members to it. Some of you know that. There's products that are not up on our platform anymore that are in groups that we still have reinsured from 6 and 7 years ago that you're still making money off of. And that's how our platform works, is because we are in business to create monthly transactions. And we are in business to deliver benefits, right? And we want to keep those benefits in place as long as we can. So that's really important you see it like that. It's also important to see it as you could have, I told you earlier that 7, 8 years ago, it was all about saving as much money as possible compared to the Affordable Care Act. It was all about it. Everybody was opting out of the Affordable Care Act, trying to save as much money as they could. They did not want that Obamacare, whatever, right? Fine. Everybody was going to HealthShare back then. Today, the consumer is back wanting to pay as much money as possible for PPO and major medical benefits. Could be recession next year, 2 years from now, 5 years from now. I don't know. None of us know. Just because someone could afford major medical today doesn't mean that they can in the future. And that is why we have HealthShare on the platform, right? Because short-term medical is gone. And you want to know what's most comparable to short-term medical? It's actually HealthShare, except just not short-term, right? So in the future, these members here may have a hard time and need to save money and come here. So let's go ahead and look at Select Silver. First of all, what is Select Silver? It is a CMS-recognized health share. This is an exclusive build that we did back in March of 2016. I think we've had 1 or 2 rate increases on this thing in history. So how it works is it is a sharing arrangement for basically catastrophic. Okay, not going to share. We don't say coverage. We do not say deductible. We do not say copays. We do not say insurance. We say sharing. We say member needs. We say member responsibility amount. Now, that member responsibility amount may work similar to how a deductible could work on an insurance policy, if you know what I'm saying, but this is not an insurance product at the end of the day, and don't represent it as an insurance product because it's not. But CMS recognition status means that there were 5 entities or 6 entities grandfathered into the Affordable Care Act. The only way to get that the CMS recognition status was you had to have been established prior to the year 2000, and you've had to share in your members' medical bills since the year 2000, and you have to perform public audit every year to verify your sharing. Okay, so we know that there's and that's the difference between a CMS health share and a non-CMS. A non-CMS, you really don't know, what all's going on. We know there's over 20-something million in the bank sitting here, but the way the plan works, and we know that it's shared continuously since the year 2000. That's why we have the CMS recognition status. So $27.50 member responsibility, outpatient treatment, surgery, hospitalization, all of that stuff, it's all shared 100% after the MRA. You can see the rates. Rates are pretty good. This does give you a lot of opportunity to add other benefits. Know what I'm saying? Now, this is HealthShare. It's not perfect, okay? You have to understand the reason you are saving $1,000 a month on a family is because you are going to have to make an extra phone call at claim time. That is how it works, okay? So don't go out selling this like it's just going to solve everybody's problems, because this is not for everybody. For a lot of people, though. I mean, there's millions of people on HealthShare. So when you look at this, first thing you need to understand about this is that there is a 2-year wait for most pre-existing conditions. Some conditions, typically those ones that are auto declines elsewhere, like diabetes type 1, stuff like that, cancers, those have 5-year waits for pre-X. The list is on the product. You can pull that up. Maybe I have it down here. Oh, I have it right here in the brochure. Look at that. Good for me. So some are 2 years, some are 5 years. You got $1 million of sharing. It's literally for just unless you're hospitalized or having surgery, there's no reason to even use this thing. Okay. And you got to make sure in the sales process someone knows that, because we do get a lot of calls. Oh, this thing doesn't cover anything. It's because they're trying to use it at the doctor's office. And well, you're right, it doesn't. So this can be paired with a lot of things. So if you want to look at adding a type of catastrophic arrangement to, say, the Value Bronze, this can be used. We will have another health share arrangement in the next month or two, a little bit lower cost to add to the Value Bronze. The only reason I'm saying that now is that it's not going to be $1 million. It's only going to be $150,000, right? So unless you have a real significant plan on the front, like a Value Bronze, you're probably going to want to sell Select Silver. But Value Bronze, when we bring on that other $150,000 version, it'll make more sense. So if there's questions about health share, type it in the chat box. That's pretty straightforward. I mean, it's a great plan. But, claims time can be a little challenging. That's where we will work with the member, okay? So it's sometimes facilities don't want to accept payment directly from a health share. So we have to get the member paid, and the member pays the facility. Sometimes the facility won't want to send medical records. The member's got to call, get the medical records, and send it themselves. We can get a HIPAA form signed and, kind of do that work on their behalf. It's just part of it. So, okay, full disclosure. Not gonna, set you up for failure. Height and weight, enrollment process. Let's do this. I do want to show you this enrollment process. This will change as we get into late November. Right now, let's say, all the rates work for, just watch this, let's go like this. All the rates auto work except for the height and weight adjustment, okay? So for height and weight, you as the agent do need to look at the chart and go, okay, if someone's 5'5" and they're 400, they're 225 plus, you need to add $100. Gotta manually do that. Sorry. It is a bit of a coding challenge. It seems really basic, I know, but there is an interesting block there. Same for kids. You got to add up the total. Like, if one kid is a $30 rate increase and the other kid's a $15 rate increase, just type it in the box. Type in $45. Cool. Update and go. Cool. I'm going to talk about a few more things, and I'm going to come back to questions in the chat box because we were just looking at the health share. Oh, man. Dang. All right. Didn't mean to do that. Oh. Okay. So now let's look at premium health. Okay, this is an insurance policy. This meets minimum essential coverage. Premium health, we are going to release this on a group chassis and put this into the group MAC non-insurance group platform that we're going to push out later in November, which is really just going to be more of lower cost benefits, some non-insurance benefits, stuff for employers that just need a MAC or just need something for part-timers, something inexpensive, something less than $100, right? Just to give their employees something. That's kind of the ideal of this. But we will be rolling that out in a group format, which we'll adjust some of the rates for it in group. But that's not there today. So we look at this, and this plan is an unlimited copay plan. It covers, primary care, specialists, urgent care, labs, X-rays, MRIs, CAT scans, all that stuff. Unlimited, covers it 100%, just a copay. And this runs on the First Health and the PHCS network. So this really has most providers in network. It's a really cool plan. So where can this plan be used? Well, some members, since this does cover pre-existing conditions day one as well, some members have higher utilization and they like to have the plan. This can pair well with Marketplace because sometimes it just makes more sense to look at Marketplace and go, just take the absolute lowest cost plan, forget about the provider network, take the lowest cost bronze, and then just supplement it with a plan like this, because this is a plan that they can actually use at the provider, at the specialist. Maybe they're able to keep all their primary cares, OBs, pediatrics, all that stuff in network where, it's all scattered out on Marketplace and they can't. A lot of people forget that, you get a referral to go see a specialist, and maybe the specialist you want or maybe the specialist you need, maybe you can't see them on your Marketplace plan, right? A lot greater chance that they're here. So that could pair well with the Marketplace plan. Notice this really also provides benefit for everything that, provides benefit for everything that Select Silver doesn't provide benefit for. Oh man, for sure. I'm doing that wrong. There we go. See? Not available. This doesn't cover hospitalization, so it's kind of yin and a yang. Select Silver, well premium. You know what I'm saying? We'll also have some lower cost office visit benefits standalone that are going to come online as we get into November. But this is where we're at today. And if today you can take that concept of how to use an office visit only plan with Marketplace by itself or with HealthShare, or even if, someone only needs 3 months and they are buying a short term somewhere else, same thing, right? But again, I'll say that's guaranteed issue coverage pre-X day one, no waiting periods. And so that leads me to Well Premium and Select Silver. How does this work? Well, it's just these two benefits combined because we can do that on our platform. Again, benefit of having a platform. We'll just combine them both, shave some admin rates because we don't need it, shave some comp, combine it because you don't need full comp on both. We don't need full admin on both. Let's make a nicely priced offering and, ship it out the door. And so it's just Well Premium with Select Silver at a more appetizing combined rate. I need to get that rate sheet posted. Another note. A lot of stuff, a lot of fine print stuff. Rate sheet, Well Premium. Okay. Now I'm going to head into ancillary, and then we're going to finish. I'm going to look at questions. Viewer 17, why did we skip America's Choice? Didn't really skip it. I mean, it's really the exact same plan structures as these here, or very similar plan structures as these here. It's just reference-based pricing. Simplified issue like GigCare. It's just a reference-based pricing chassis with PHCS. So it's really a very low seller for us, to be honest with you. Our sales are coming in on PPO. Because reference-based pricing, where it works, it can work, but there are going to be facilities that won't accept reference-based pricing or can balance bill, and that can be a challenge. Now, their reference-based pricing does work very well compared to most reference-based pricing outfits, which is why we leave it up there. But that is, kind of a challenge. But otherwise, it's really the same framework of the plans. You can go back and look at some of the minor deductible and copay differences. So Lisa asks, not sure if this is asked. Can you send me the recording? Lisa, can you shoot that into support? Because we'll lose all this data at the end of the call. But everyone that registered for this will get the recording. So if you use the same email address, Lisa, then we'll send this. Chuck, does Select Silver still require a policy fee and contribution? Well, Chuck, there is no policy fee because that would be an insurance benefit. It does have a member due. The member due is baked into the monthly, and then it does have an enrollment, a ministry donation of $125 to join. Basically, kind of like an enrollment fee. You know what I'm saying? But it's a ministry donation. Start. Viewer 73. How do you get the height and weight chart? Right here. Height and weight. Ping. Viewer 17, if a member gets service outside of a resident state, do the plans cover as if in a resident state? Viewer 17, that's a really good question. The plans do, as far as utilization goes, the plans do not care at all about your resident state. That would not how an insurance plan can work. The resident state only matters at time of purchase. You just need to be a resident, or your company needs to be domiciled in that state at time of purchase. It's not ACA, where the reason ACA makes you change policies when you go to a different state is because the networks just aren't going to work. No difference than when you had a short-term policy. If you bought back when you could buy a 3-year short-term policy just a few months ago, and you could move to a different state. You didn't have to change your policy, right? Now the policy will follow you. It doesn't matter. You just need to be in that resident state at time of purchase. And that's also why these plans are good on a PPO network, because you're going to find providers nationwide. Viewer 17, how does contracting work? What are the commissions for the plan? You know what? We're going to get to that in just 1 second. Contracting is a simple link. It contracts you for everything on the platform. You don't have to contract product by product. It's a really good question. I should have brought that up earlier before everybody's going, man, I don't want to do all this contracting work. It's super simple. It's one link. We're the administrator. You're signing the contract with us at the administrative level. So anything we administrate, we're just going to pay you, right? You're not contracting directly with carriers, because these aren't carriers. These are group policies that we administer for a health share plan. So, I know we're getting late in the call, so before I go into ancillary and talk about some of these benefits, I do want to get into compensation, because we have made an update to the compensation model. Or I shouldn't say the compensation model, but the way that you're going to access your compensation sheets. So now if you go to USA Health Plans, you go to Agent Login, you go to your back office, and you go to your resource section. This is where we'll have a rate sheet. We're going to post a new one soon. This is where you're going to have your comp grid. Now, here's what I can tell you. It took me 8 years to figure out that we're going to start doing these on Live Docs. How about that, right? So basic. We were continuously having the issue of agents downloading the comp grid and then using the comp grid for 2 and 3 years. So some comp can be twice the amount, a year or two later, depending on the plan. And then it's so hard for us to keep posting updated sheets. So we just have a live comp grid now. You can take this, click the live sheet, and just bookmark this. And you have the live sheet and the comp for everything. As you make updates here, the updates to comp will happen in real time. So, again, these are group plans. So, future comp can change. We only change future comp. We never change comp on existing members that you have. Or we've at least never had to do that in our 8-year history. I've never had a vendor force us to do that. So, our model, it says unless the insurance company comes in and mandates the change, we're not allowed to change comp on any existing members you write. Comp can only change on a going forward basis for new members. So here you'll see the comp that exists with the effective date the comp started. So we'll look at EBA. I just used an example. These are not fully built out yet. This should occur over the next week or so to get these full and all the plans on here. But just for an example, if you're looking at EBA, EBA producer comp is $80 per member only household, $115 for a family. We then pay 3 levels of overrides. This occurs on really all of our products. The only exceptions when we get into like some visions and stuff like that, where we can only pay 1 or maybe 2 levels because USA Health Plans, we don't even make money off vision. I may make 25 cents, 50 cents sometimes. It's really just a gimme so you guys can have a benefit because it's a loss leader, right? You got to have it. So anyways, we pay 3 levels of overrides, and this is stock for everybody. And that is what's unique about our model is that we want you to be able to build an organization with us and, really kind of take a stake in our company. And the way we've created this enables you to really lock in a position for someone you bring to us because there really is no reason for someone to switch organizations because everybody gets the same deal. It's not like you came in underneath somebody and your comp is getting cut because you came in underneath somebody. So let me give you an example. Let's say I'm with USA Health Plans, because I am, right? And when I sell member only on EBA, I'm going to make $80 a month. And then let's say that I go sponsor or recruit Alex to come sell for USA Health Plans. Alex would be a producing agent. He would be on my level 1, right? So when Alex writes EBA, Alex is going to get the exact same 80 that I get. He's not under me getting his compensation cut. Okay? He gets the full comp that I get. Now, he's on my level 1, so when Alex writes it and makes 80, I'm going to make an $8 override. And let's say that Alex goes out and sponsors or recruits another agent named Katie. Okay? Katie would be on Alex's level 1, and Katie would be on my level 2, right? Alex is direct to me. Katie is direct to Alex. Katie's going to, when she writes business, she's going to get the exact same $80. Alex gets same $80 I get, right? And when she writes that, Alex would get the $8 override because Katie is direct to Alex. And I would get the level 2 override because Katie is indirect to me. I hope that makes sense. If there's questions, type it in the chat box. Now, should you spend 100% of your time recruiting? Absolutely not. This is long-term money. It builds over time. Focus on sales, but spend some time bringing agents and sponsoring agents. You want to create as many different sources of income with us as you can. And when you sit back and you start to look at our platform and you go, I'm going to be overriding or I'm going to be earning income from multiple different product types, from multiple different, types of reinsurance, from multiple different group entities, from different small groups, large groups, on major medical, on cooperative. Your income is so diversified in that format. But then think about your overrides. Your overrides are just as diversified on all of that. It's not like your overrides are just tied to one product and one entity. I'll go back to that instance of thinking about us as a hub. Let's say 3 years from now, EBA is not the way, and we roll all the members to GigCare or to a different company. Or let's say 2 to 3 years from now, there's no gig care. If you had all of your gig care clients direct with Datego, you got to go rewrite everyone. Your whole downline has to go get contracted somewhere else. Basically, your entire income is going to be disrupted big time. But here, we would just push a button and move them to the next most comparable plan, and everybody's income stays intact because your hierarchy stays intact. The residuals stay intact. You're not having to go out and recontract. The consumer data is in our system. It's not at the carrier system. And to be real frank with you, in the ACA alternative world, you have to look at each product as a 2 to 3 year opportunity. That's how this side of the industry works. You're not looking at this. You're going to, these products are going to be the flagship for the next 10 years. I hope some of them are, right? Flex Silver has been there, but that doesn't mean that all of them will. And as a business owner, you have to think like that, and you've got to have your income diversified. It's no different than, back in 2015 when the ACA marketplace went to 0% commission. You know how many agents I talked to that weren't in the industry in 2015 and had no experience from that, and all they're doing is selling marketplace? And I'm like, literally within 1 year, everybody's income went to zero in most states. I remember here in St. Louis, gosh, Cigna came in. They took us all out to lunches and did all these seminars. They sold us contracts, lifetime, 6 or 7% residual on their ACA marketplace product. And then guess what? 2 years later, they changed the network, which changed the policy, which terminated the lifetime residual. It went to 0% commission. So even with ACA, you don't want to have all your eggs in that basket. So anyways, I just want to go back to this real quick to kind of finish up. This is the compensation on individual groups 2 to 9, groups 10 to 14, groups 50 plus for EBA, SBA plans. It's all here, all the overrides you make. Value bronze, $75. We talked about value bronze today, $75 level. All compensation is level unless stated otherwise. And I will tell you right now, there's only one product that's not level, Washington National. We'll talk about it here in a minute for those of you that want to stay for overtime. And but we're very close to having a level compensation agreement negotiated with them. So, top producer. What does this top producer line item mean? Well, click the top producer tab right here. Let's go find out. Okay, top producer means when you produce with us, we are going to reward you for producing. Okay, because everybody gets the same deal, but our producers are going to get a better deal. You are. Produce, you will get a better deal. We can afford to work on less margins. So qualifying product types for top producer compensation. If there's top comp, it's outlined. EBA, Datego products, which include Gig Care and America's Choice, which we are bringing on another Datego product. It'll $1 million plans. Those will be up. I forgot to talk about that today. Those will be up in the next week or two. Value Bronze, SBA, Premium, and Select Silver, right? So to be a top producer for one product type, you need 35 households enrolled for that product type. Plus 10 households with ancillary. Got to have some ancillary sales out of you. You could have 35 households on EBA and 10 standalone households on Accent. They don't have to be combined to EBA. Don't care. You just need in some way, shape, or form. There's got to be 10 households with ancillary, and there's got to be 35 households for that product type. Once you've written that, we will then give you the top producer. So let's, for example, if this was EBA, we would bump you to the top producer comp level on EBA. So you've got 35 households. Then we would start, instead of paying you $80 a month on 35 households, we would start paying you $90 a month on 35 households. And then every household going forward. It's not retroactive to the day they started. It is effective on all households once you achieve top producer. So Not like the first 35 are locked in at 80 and household 36 is 90. That top producer will apply to all active households. That's one way you can do it. Or you can just write a total of 60 households combined on all product types. And if you write 60 households combined, then we're just going to make you top producer on all product types that qualify. Make sense? So whether 60, you could write 60 EBA, and we'll give you top producer on every single product type. You could write 10, 20 of this, 20 of that, 20 of this, 20 of that, and you'll get, as long as you have 60 combined households, you will get top producer on all. So, cool. We also do it in group. I'm not going to talk about group today. So these are here. These will be updated in real time, and I guess we'll have this retired tab so you can see this will be filled out as well. This is retired. The compensation, was the old compensation model for EBA was retired. So if your members were effective from 12/1/23 to 9/30/24, there was your comp, right? Because we've retired that out and we've moved to a higher comp model. So those members stay intact, but their pricing structure is different. So, all right, I'm going to go back to ancillary. I'll look at some questions. Courtney, are commissions static year after year? Yes, commissions are all level. All compensation is level unless outlined otherwise. If we discontinued an old comp model, that means those members may be tied to an old pricing structure. Nothing changes. As long as they stay on that plan and the old pricing structure, that comp is level. It's going to continue. So, yeah, everything's level. Same with the overrides. Year 43. Will we get a link to send to other agents? How do we do that? Yes. Reach out to support and we'll get you a contracting link. Right now it's a generic link. We'll make some modifications in the future to streamline it a little bit better, but it's just a generic link to contract. And they just list your name as the referring agent. And we do not let anybody contract direct. If someone comes in with an empty field, which it can't be because it's forced, we can figure it out based on which link's created. All right. So shoot that into support. Team will get it to you. Viewer 17. So contract directly with USAHP. Does that mean we do not own the members? The members are yours. You can move the members if you want. You just got to write them somewhere else. You cancel them. I mean, we're not taking members away from anybody. We are the administrator, so we are doing all the billing. We're doing all the eligibility. We move all the money. We use a third-party administrator to move all the money on our behalf. We don't touch the money. We don't touch the members' money for anything related to premiums. But it all runs through us. And I kind of left that out. Anything that's enrolled through platforms also single billed. So if you've got 4 different plans here, all 4 will be one monthly bill to the member. Are those member per month? Viewer 17, yes. All those commissions were flat dollar member per month. Viewer 43, okay, I already looked at that. Viewer 17, can we see a comp grid for other products, please? This comp grid, I'm just going to paste it in the chat box because this is, all products will be on this document. I need another week or two to get everything up to date. There's a lot of conversions that have to happen to put this in the live doc format. And there's only so much time in the day. Unfortunately, 11 o'clock at night, I just got to go home. I've been here at 11 o'clock at night every night for the last 2 weeks. Do agents I bring in get to own their book? Yeah. Yes. Every agent's, it's their members. You don't own them. If they want to move them, they are there. It's their client. So I kind of answering that question, but we will not talk to your members unless they're active. USA Health Plans does not make plan recommendations. Members can call in and they can ask about their plan benefits, ask how to use their benefits. But if they're asking about, other plans that are available, we won't talk to them. We do not participate in the sale or procurement of an insurance product at USA Health Plans. We only provide level 1 member service, and that member has to be active or about to go active. Lisa doesn't have anything in her resource. Interesting. Okay, she's something in support. All right, I'm going to keep going. So, talk about ancillary plans, accident AME. So first, I do want to say, talking about ancillary, man, this is a long call. I'm really sorry. There's just a lot of stuff, right? We'll break this out into more segmented calls in the next week or two. I'll do some other webinars. Maybe we'll just do one ancillary, one major med, stuff like that. Anyways, accident. What I want to say about ancillary is notice that our Zurich products are gone. I know that was a painful decision that I had to make. There is no issue at all with any of our members that are on the Zurich plans we had the last 2 years. Nothing at all wrong with the members. The third-party administrator we work with has been bought out, and they have made it extremely difficult to work with. And that process has been causing a number of our members not to reflect active up front. Specifically, we had a lot of people hit on vision, and some of you may be on the call and know that. And then we have the member freaking out because even though there's nothing wrong, they're insured. If they are live in our system, we collected money, they're live in our system, they're insured. But at the end of the day, the claims payers are obligated to follow us and our rules. But the consumer doesn't know that, right? So that TPA was making it very difficult. They wanted stuff basically to be converted to French instead of English, and it was causing members not to show active up front, and we'd have to manually make changes with them. And you'd have a member call in trying to use their vision plan, and then they'd be pissed off and they would want to cancel their major medical plan. And it's like, well, we're just not having that. So we hope that we can move to a new TPA for 2025 and bring those plans back. But for now, all members are onboarded, all members are in. The only issue was literally just that connection issue of converting from English to French to make someone live in the first place, which we've done the work to do. I just pulled them down because going into open enrollment, if we take on a couple thousand members in that arena, to have to do all of that manually to convert to a different language, it's really literally not French, but in eligibility terms, it's French. It would create too much chaos. So I pulled them down. Nothing wrong with the plans. Those plans are rock solid. I hope to bring them back next year. Anyways, NFCL Accident. This is an old lines insurance product, and this has a lot more state availability. We've got the rates tweaked a little bit better for you. Gosh, I've got to get the rate grid on all of these. That is not being passed down. So AME is pretty straightforward. Pays 100% for anything accident related up to 7,500, 10,000, whatever the case may be. So we'll just look at it this way so we can look at a rate. Come on, come on, come on. There we go. $35 a month for 7,500 accident AME. And 20% comp level. Level's huge on these ancillary products. We get a lot of persistency on these ancillary products. If you throw it in at checkout, I mean, we literally never have a member call in and go, hey, can I just remove the accident plan from my benefits? Members either call in and cancel everything or nothing. right? Because once we've single billed everything and they've gotten through the enrollment process, and they're done. They're looking at, they've set that monthly amount aside and they pay that. And we got ancillary members and on the books for 8 years. You know what I'm saying? So to go into a level comp format on ancillary is a really big deal. I know it costs you a little bit in the first year, but hey, I look at it as, I mean, I'm in it for the long haul. So anyhow, all right, let's go back. Enough about that. So there's the accident plan, up to 10,000, and then I need to clear the cart. It's gonna kill us. There we go. Here, every product we have is available in Texas. That's just why I always choose Texas. Reliance Standard, critical illness, A-rated carrier, guaranteed issue, critical illness, $6,000 or $10,000 benefit. And then there's these new things called Value Pack. What is Value Pack? Well, it's probably not going to end up being called Value Pack forever. I'm just getting this up for an example so you can see what's coming next month, some of the stuff that we'll be doing. These types of products will kind of be like those office visit only products built with some wraps, because what we want to do is be able to create little nice gap wrap bundles where you can pair stuff really easy with the ACA all in like a packaged format. Someone with Marketplace or someone that's just needs something for to add to their health plan. So Value Pack, all we did was combine accident A&E. We've included an unlimited lab benefit through Quest Select Labs. This is a super cool benefit. You're going to start seeing this show up on more and more stuff. Quest Select Labs gives you unlimited labs at a $0 copay. And you can use that at any Quest Diagnostics location. Pretty sweet, huh? So what we did, we took the 7,500 accident AME, we wrapped in the unlimited lab benefit, we wrapped in an unlimited consultation benefit for counseling, some mental health stuff with Balance for Life, and then there's $15,000 of accidental death and dismemberment. That comes in all in at $65 a month for a member, and then $145 on a family. So some families that price point may be too high for some of the family zone. Maybe it's not. To get that all together at 65 is a pretty good deal. I mean, an accident plan was what, 35, 40, or whatever. You can just throw this in the shopping cart with anything else. Value Pack Plus, really all we did. We just wrapped the CI in. Right? We can tweak the admin rate, stuff like that. Combined costs, unlimited labs, member only, that's $95. Cool. And we'll keep going around the horn. Active Care. Do not let this fool you. This is not an accident plan. Active Care, ironically, is a critical illness policy. This is a simplified issue. The Reliance Standard we looked at was a guaranteed issue, right? This is a simplified issue. There is no rate sheet for this. The only way you can produce rates is to go run a quote here, because this is a rate engine. Washington National represents one of the few, maybe the only state-filed insurance product on our platform. Therefore, rates change by state, zip code, all that good stuff, age. So this, update, and it'll produce the rate. Well, coverage must be at least $15 a month to issue. Well, we're not buying a $5,000. Probably just turn that level off. It's kind of a waste. Started at 10, but you can buy up to 100,000 simplified issue. The $50,000 mark is kind of critical. Here's why. Below $50,000 and below, they're going based off the questions on the application. Once you write more than 50,000, they're going to pull a script check. So there is an auto decline list in your resource section that outlines the auto decline drug. So if someone was taking that drug in the past, they'll auto decline for that. So just know that if you're writing above 50,000, if someone's taken some drugs in the last 5 years or so, you may want to cross-reference that list. So, but anyhow, we'll just do 50,000 here, update it, and there you go. You got a $50,000 cancer-only policy, or heart attack and stroke only, or cancer, heart, and stroke. This would be identified as a full critical illness. Now you could add this to Value Bronze, depending they can answer the health questions here. So that's there. We also have Washington National, their Hospital Assure. This plan is kind of cool. It's a lump sum payout for hospitalization, $1,000 to $5,000 lump sum payouts. Kind of works as a gap plan. This does include maternity, so it has a 10-month wait for maternity. But if you wrote a $5,000 plan, after 10 months, someone delivers, then it pays out $5,000 at delivery. So hey, that's kind of a cool benefit. But it'll work for anything sickness, accident. You get confined to a hospital, it'll pay out the benefit. Accident Assure, probably my least favorite benefit on the platform. It's one of those accident plans where it's just kind of like, I'm such an accident AME person. Like, I love to see a defined benefit, $7,500, and it covered 100%, right? But this is $300 a day, everything's just kind of fee-based. So what I don't like about it is the member really never knows what they're going to get, and then they're filing claims to get $50 here and $50 there. I'd rather the member just file a claim and they just get it paid for 100%. The retention on that is so much better. But an AME plan costs more. Why? Because it pays out more. So Jacob, if you're not really that big of a fan, why did you list it on there? Because this is available in pretty much every state. We don't have our accident plan in Washington State. That's there. So really that accident plan is put there to fill in the blanks where we don't have another accident plan because of a state limitation. And last but not least, dental and vision. Holy cow. Why on earth is dental and vision at the very bottom? It's like the biggest seller. Kind of the same reason Costco sticks the toilet paper and the paper towels in the back, right? You got to walk by everything first. Sorry. I'm here to sell benefits. So, I want you to make sure you're constantly scrolling down and seeing what's being updated and added, because it's easy. It's really easy to, stay here. But just know that we will be adding benefits. They will continue to go farther and farther down the page. We will be bringing on a new dental benefit. United Concordia was part of that TPA issue with eligibility, which is why United Concordia got pulled off. So we will be bringing on a new dental benefit, but for now, we do have Ameritas. Ameritas is a $2,000 benefit. It is a fee-based type benefit based on average rates in the area. We've had this plan for several years, and we really get no complaints on that plan. So works pretty good. And then we have our NCD Vision. All right, and I am done. Courtney, how do we look at the existing Zurich benefits if a policyholder calls me? In your back office, you can see the members that are in your back office when you click on members. That's really the only thing I can say. Other than that, your member can always call us. We really prefer to play level 1 member service where we can. Just keeps your hands clean, keeps you right in business. If you can, really look at us as an extension of you. We're a small team. We're not United Healthcare. So, if your member calls in twice, we probably know them. So, but yeah, it should be listed underneath your member tab. All right. 1 hour and 41 minutes. No way. There's no way I thought I was going longer today than yesterday's call. There's a lot of information. It's a big platform. It's got a lot of utilization. It's got a lot of application. What I want you to see from this, it may take you a couple times to see it. You may have to start writing benefits first. And don't sit here and feel like you got to learn all these products up front. Go find your buyer first. Don't sit here and study yourself to death or study yourself to bankruptcy. Go find your buyer. The health insurance world, it's really easy. Okay, it's always an interview process. You don't lead with a product. You have no idea. You could look like an idiot coming in and going, this is the greatest product ever. Oh, sorry, you won't qualify. Go in with an interview, figure out who they are, what's important to them. What do you like about you? Who's your current insurance carrier? What do you like about your existing plan? What do you not like about your existing plan? Besides premiums, come on. What else do you not like about your existing plan? Right? Start identifying. What do you want your new plan to have that you don't have now? Right? Stuff like that. Go figure out what they have, and then you can come back and look at this and go, okay, now based on what that individual said, I've identified that major medical makes the most sense for them. But then based on what that person said, if I go in with major medical, that's probably going to be a waste of time. They may not have the budget for it. They told me they can't afford $1,500 a month. You can always show major medical and say, hey, maybe that's there. Major medical's great. It's as good as it gets. But major medical's worthless if you can't afford it. That's great, it's unlimited, but unlimited is worthless if you cannot afford it, right? So I know there's a lot of benefits here, so it takes a lot of time to go through, but what I want you to see as you start navigating through this is there is really a net for almost every type of consumer you're working with. There's always going to be a few that slip through, but the net is there. And all these kind of speak to each other. And that's how we bring products on the future, is we identify what are the best product types for that certain consumer type, and we bring it online. So thanks for being with us. Thanks for your business. I'm looking forward to have a great open enrollment with everyone, and we will catch you on the next call. Have a good day.